This week on Full Circle Florida, the Sunshine State's crossfire hurricane. As the storm season begins, the state's insurance market showing signs of life. 8 companies now reducing rates for the first time in years, and more companies setting up shop. But will it be enough to absorb the shock of a busy hurricane season? Nadine Yanez is here with new reporting. The Dow hits 40, but does it really matter? And are we in an era of a new kind of American economy that's crash-proof? And is inflation here to stay? My conversation this week with financial advisor John Wax. And the race for the White House. Is Biden losing support among black voters? Is Trump winning in the swing states? And will his recent comments about birth control come back to haunt him in November? Rick Klein joins me with the Washington Reality Check. Welcome, everyone, here to Full Circle, Florida. You know, it's hard to know the truth these days. This week, we saw the Dow break the 40,000 mark before it went right back down. But what does that really mean for you? And if the Fed can't control inflation, then where are we headed? Here's my conversation this week with John Wax, the CEO of Waller and Wax Advisors. What does the Dow hitting 40,000 actually mean? I mean, it's a cool number, but does it make any statement about the American economy?
I mean, it certainly gives you optimism, but it's mainly just a number. You know, it's measuring where we are, but as far as a signal of how things are, it's just something people are happy to see.
There continues to be this disconnect between the metrics of the economy, unemployment, the stock market, what people actually feel though when they pay their bills. Has the economy, like politics, like media, like everything else in the 2020s, become so fragmented that the measurements can say one thing, but you feel something else? And depending on where you are in your life and where you are in this economy, your experience may be very different than your neighbors.
Yeah, that is probably the American way. I mean, we have different sectors going through different phases, which is different from what we've dealt with in the past. Usually a recession comes, everything gets hit. Now we're seeing some areas struggling, some areas are thriving, and depending on where people are in the economy, kind of dictates their ability, their buying power and such. So right now, there are people struggling, and it's unfortunate because the prices, while the rate of inflation may be backing down to more modest levels, it doesn't mean the prices have all come back down.
They haven't, and do you think we're at a point now where one pillar is not holding up this economy, like the housing market that crashed in '08? Have we moved beyond that, or should we not take that for granted either?
The housing market is different now than it was in '08. Yes, prices are way up and availability, things like that are concerning, but we're not sitting in a situation where the owners of the houses have, you know, variable rate mortgages and they borrowed too much and they can't sustain their own properties. This time, 80% of the mortgages were refinanced during the pandemic to below 4%, fixed rate. So this time, as they're raising interest rates to try to deal with inflation and issues in the economy, they're not hurting the homeowners like what happened in '08.
Warren Buffett famously said, be fearful when others are greedy and be greedy when others are fearful. Is it time to be greedy or fearful?
I love the quote. And just like he says, when people are fearful, be greedy. I wouldn't say be greedy, but I would say look past this pessimism and seek the opportunities you can find.
So it's not as bad as maybe it's being reported,
Correct.
But don't go overboard.
Correct.
Irrational exuberance. That was another quote.
That was one from, that was Alan Greenspan.
Alan Greenspan,
Yep.
yes.
Yep.
Two wise guys, as they say. So should you be buying or selling or staying put right now?
This is a very good question. We hear this a lot. And the answer is it's always a good time to buy. Because as an investor, you need to have a long-term approach. If you have a short-term approach, you should not be investing in risk. You should be investing in safety. But if you're going to be investing in risk, it's always a good time to buy because invariably within the first couple of years of deploying some money, things will be worth less than where you started. But in the long-term scale, things will be worth more. They'll be worth a lot more.
If you've been sitting on the sidelines, people might feel like, well, it's too late.
Yeah.
Because they hear different things, you know, about how the economy is doing. Is that necessarily true, or should you join?
So
investing.
When it comes to investing, human emotion and investment profit don't work hand in hand. The gut instinct is to try to be the bottom buyer and the top seller, and nobody can time that. So what people will end up doing is they'll say, I want it to be a little lower before I buy. But then it goes down some and they'll say, well, it's going to go down more. So they wait. You won't know the bottom until it starts rising. And at that point, the investor would say, well, I'll wait till it goes back to just that bottom spot. People who try to time it with that kind of emotion tend to buy way above where they would have bought if they just deploy when they're ready.
Steady Eddie wins the race. John Wax, thank you so much.
My
Thanks
pleasure.
for coming by. Appreciate
Thank
it.
you.
Next on Full Circle Florida, Biden's problem with black voters and Trump's problem with women. Rick Klein joins me next.